Commodities are goods which are taken from their basic natural state and upgraded to minimum state of achieving a sale in a market. Commodities may come in several forms and categories. The categories are mainly divided into three depending on their nature. They are hard commodities, soft commodities, and energy. Hard commodities: gold, silver, and platinum. Soft commodities: wheat, coffee, tomatoes, eggs, and beef. Energy: crude oil, natural gas, and coal. Commodities are used to fulfill basic needs based on their requirements in terms of food, energy, industrial development, and investments. You can trade these commodities anytime you want, as there is always a buyer at the other end and a seller when you want to buy. This commodity market is so volatile since it is wholly dependent on human needs. Crude oil and gold are the most traded commodities in the Forex market. If you just look at the world, you might see several countries and regions are specialized in several commodities. For example, Canada is the world's third largest crude oil exporter, while USA imports crude oil from Canada. When the crude oil prices go up, the value of CAD goes up and value of the USD goes down. Australia is the world's second largest gold exporter, and gold is mostly traded and priced in USD. So when the gold prices go up, the value of AUD goes up and USD goes down. Commodity market can also be affected by the external environmental factors like natural disasters and economic booms and depression. And those other factors are discussed in the tutorial Factors Affecting Forex Market. If you are interested, simply hop into the next tutorial after this. Well, that's about commodity trading. If you have read and understood the tutorial 7 completely, congratulations! Step into the next tutorial, Forex Disciplines. If not, read the tutorial carefully again, as the lack of knowledge will end in losses.